All right, what's up, everyone? Welcome to another tonight, Monday night charting for the week. We're just going to get right into the same order we go in, starting with the A's and working down to the Z's of the watch list. The first thing that someone wanted me to look at was American Airlines, and this is a stock that I'm pretty familiar with. And for all the new people in here that may not have been around when I've been charting these past few weeks, I like to start on the major time frames just to get an overall picture of what the stock is doing. I don't usually use the S&P with stocks unless I know the correlation with them, but just going off of American Airlines, I'm starting on the daily chart just to have a good overview of what the stock's doing on a larger time frame, where it's sitting at, whether it's a major support or a major resistance coming up. So looking at the daily, obviously we're making the higher lows on the support trend on the rising upside, and we're trying to break out, it looks like, on a heavy resistance zone on the top side right here. There's a lot of rejections that American Airlines has had, and we actually had that rejection on Friday. So there's going to be a lot of contesting if it does push up higher. Going to the smaller time frames now, since I have an overall picture on the larger frames as to where American Airlines is sitting, I want to take it down a notch and look for actual entry points, price target achieves. I want to see whether it's the upside or the downside. And I'm very simple when I chart. I don't like to put support or resistance every 20 cents a share on stocks like this, whether it's Tesla, Amazon, Apple, whatever it could be. I like to focus and wait for the major zones to approach and to hit the way I want them to. I don't want to rush into a play off of FOMO. If it's pushing upside, I don't want to chase calls. I'm literally waiting for a stock to come to an area that I'm comfortable with, that I'm heavily interested in, to look at it for either a day trade or just a scalp. I want low risk, high reward with every play that I enter. So looking at American Airlines, obviously, like I was talking about on the daily, we've had a lot of rejections on this resistance every time it pushes up. And when we do break above upside, it doesn't have much strength to keep it there. So we're basically pushing the rejection area right now, looking for a pullback, it looks like. For me, with the way that I think and the way I trade, obviously other people have their own opinions. But when I'm looking for either a call position or a put position, I don't want to go into an entry when it's basically zoning in the middle of the consolidation. American Airlines has basically been zoning in this area right here between almost $13.50 a share up to roughly $14.50 a share. So there's a dollar differential of the stock share price that's zoning between. Every time it does break out or break below, it always pulls back inside this zone. So when I'm looking at stuff like this, I'm trying to find a center ground or at least a lower risk entry for calls or a lower risk entry for puts. So when I'm focused on the call side on this, it would be nice for me personally, or anyone else that maybe trade the same way as I do when they chart for the largest zones. I'm looking for a pullback and a hold that's roughly around $14 a share down to about $13.85 a share. I want to see a zone that's held historically hold again. We've had a lot of bouncing points on the support when American Airlines does dip and it holds with buying pressure. And I don't want to enter too soon, because we've had fake outs before where it dips below and then that's a liquidity grab and it pushes right back to the upside. I don't want to get faked out and rush a position because, oh, it touched my zone, I want to enter now, because it historically it works out. You don't want to enter too soon. It's honestly better to enter too late once you see the strength of buyers on a dip for when you buy calls. So with American Airlines, I'm going to keep it very simple, like I do with all the charting I do. If I'm looking for a call position, I'm not going to buy calls if it breaks out above 1450. Obviously, a lot of people that like to play the breakouts, they like to play the volume surges on the upside with calls. I am the complete opposite. I'd rather wait for a dip to catch an entry point at a solid support where if I am wrong and it does keep dropping, my risk is already minimized because of the objective that I'm buying off of historical bounce points. I'm buying off of the effect of we've held this or rejected it as resistance. So this zone is going to be heavy wherever the price action on the stock is going towards it. So since we're above, if we pull back down to roughly the $13.85 to $14 a share, I would look for a support hold and a curl that's going to push back up for American Airlines. So I'd be focused on calls if it dips down to that $14 a share area. And you want to wait to see if it has that confirmation of buying pressure, or as long as the stock holds that support zone. If I'm looking for a put position, which obviously right now you don't want to enter puts only because, oh, it's rejecting 1450. You said that was your rejection zone, so why not get puts right away? You want to focus on the idea of it can break out and not actually push to higher highs. So when looking at a rejection zone, roughly around 1470 a share, there's going to be reasoning to short that. I'm not saying, oh, it pushes up to 1470, I'm getting puts right away. It has to reject because he said so. You have to understand the concept. Stocks can break out, but not have the strength to have that continuation. So they're going to pull back at some point. You want to use time in your favor. You want to use patience. You don't want to rush into a play because, oh, a level touched, I have to get in. You want to focus on the bigger picture. You want to focus on, I want to wait and see how it reacts to this level. And I want to go off of what the volume is telling me, what the chart's showing me, what the candlesticks are forming as the whatever time frame you're on, the 15, the 30-minute. Me personally, I don't like to execute trades on the 5-minute or less. I'm always focused on the larger time frames to wait for those zones to fill, and then I'll make the entry off of that reaction. So just a quick overview on American Airlines. Personally, I would wait for a dip for calls at roughly $13.86 a share, $14 a share. Anywhere in that zone for a dip buy for calls would be the best low risk, high reward entry, going off the reasoning of a bounce that can occur if buying pressure increases. And then, of course, if you enter calls there, you're looking for the PT, which is the price targets of $14.50 a share, consolidating and possibly rejecting. So you want to take profit in that area. And the main gap fill, if you're looking for that 14 a share to the upside, is around 14.77 a share. If you're looking for a put position, I would be watching that 14.77 to $15 a share. Watch that zone to see how heavy the rejections are and also the volume that could be coming in. You don't want to obviously assume anything, but when looking at a quick pattern that I'm now seeing, if we draw this rising wedge right here, we could possibly contest and have a nice rejection for puts roughly around this area at the 14.77. If we push, we're going to reject what used to hold in this rising trend right here, this rising wedge. When looking at this trend line, since we're outside of that, we're going to reject it every time that we try and contest to break back in. We're trying to contest here. If we push higher, we're going to recontest it again. Since we held inside with the rising support, now we're going to be rejecting with the resistance trend on this line. So if you're looking for puts, watch the 14.77. Don't rush it. Wait for the chart to form, give you more conviction. But that's the thought process I have with American Airlines. So when going off Apple, obviously Apple's a major stock in the S&P index. So I'm going to start on the daily, even though majority of people know where it's sitting at. We're still contesting the previous lower high on this trend line right here for Apple. We're still focused on this zone, trying to break with the buying pressure on the upside. We closed Friday very well for Apple, so the momentum should carry it to the next resistance, which is going to be roughly around the 178 a share, which is obviously the second lower high from the all-time high for Apple. Switching to the 4-hour now. When I'm looking at Apple on the 4-hour, I love to use rising wedges and trend lines with things, but at this point, there's a lot of consolidation that happened in the last 2.5 weeks. So I'm not too focused on these trends with this rising wedge anymore. That's one thing that I do love to play, because when you're focused on the actual trend, you can catch the reject and then buying calls again, the reject area, buying calls again at the bottom. You're focused on those zones filling. So when looking at where we are right now with Apple, we're not really too sure of a breakout or maybe a drop down. I told everyone a few weeks ago in the charting session, look for that 170 a share to touch again and go long with calls. And sure enough, Apple had that drop and kickoff off of that buying pressure. That support zone is going to be heavy. And obviously now we're breaking out of it. We're above my historical resistance around 175 a share. So is Apple going to hold in this bull flag on the 4-hour, or could it take a drawback? We have a nice grab right here if we do dip. That's going to take the new support that's higher up now, which is going to be roughly around about 173.6 a share. In this area, we had a lot of rejections trying to break upside even higher, but we kept rejecting. Once we finally broke up above that, the pullback we had to the now support, it tried to hold and bounce off that. Once we rejected, we still held the 170 a share zone that I was watching for a call entry. Once we held that and pushed back up, we had heavy buying pressure, a lot of volume. And that's what made it almost break out of this channel it was in over the last 2.5 weeks. So if I'm looking for an entry on Apple, obviously tech is hot. You want to take that into consideration. And also Apple is one of the leading stocks in the S&P. So it's going to have that momentum. Even when the S&P is red, Apple can be green and vice versa. When the S&P is green, Apple can also be red. So you don't want to use any overall market sentiment to make your decision on Apple. You just want to play it smart. And just like with American Airlines, you want to focus on the zones and have low risk, high reward. There's nothing you're missing out on if you do chase Apple for calls and it rejects. Say you don't chase calls and it breaks out and it keeps running. You're not missing any play just because you're not forcing a FOMO entry. A lot of people, they just want to enter and hold. They want to buy and just risk it because, oh, I don't want to miss the play. I just want to enter and let it go. You can't have that mindset if you want to have low risk, high reward probability in your favor. So for me personally, if I'm looking to get calls on Apple, I would love to see the 175 a share break on the downside. This may cause people to go short if you're on the smaller frames. When seeing a bull flag and seeing it break on the downside, people want to start chasing puts. They want to expect, oh, we're basically double topping from the previous high we just had last week. I don't want to get calls because we're rejecting. I want to see the 173.6 area, 173.5 to 174 a share. I want to see that hold if we drop down to that zone. Seeing a lot of buying pressure here. We're going to make a higher low from the previous 170 a share support that held. You have to focus on the bigger picture with stuff if you want low risk, high reward. For Apple, I'd love to see a dip to that support at roughly 173.7 a share area. If we do hold that, the PTs are obviously the 175 a share, and then my gap fill is going to be roughly the $177.8 a share, which is the previous lower high from the all-time highs, which was back here. I'm always focused on the gap fills. I'm not really focused on the smaller frames, and Apple has that momentum to go. We've been seeing Microsoft push. We saw NVIDIA and AMD push this last week. Tech is still hot. So it's not like it's a risk playing calls on a dip. It's not like, oh, it's dipping, I don't want to get calls because why would I get calls when it's dropping? You want to focus on the higher lows with support being bought up. You want to focus on the strength overall of all these stocks that are going to be happening this week. So I would not be looking at puts for Apple at all. I would only be focused on calls with the momentum in the tech sector right now. For me, I'd look for a dip to this highlight I have right here. That would be a solid entry for calls only because of the historical rejections. Now that price action is above that, this will act as a support zone. You always want to use support and resistance flips when trying to play the larger zones on stocks. So I'm switching over to AMD now. The first thing I'm going to say about AMD, obviously, if you didn't catch the move that's already happened, it's not like you're chasing, but it's very hard to play a stock that's been running like this, even in the last 2 days, let alone the last week or so. AMD had the breakout. I told you guys a few weeks ago about the entry point that we wanted after the breakout in this area right here. And I do have a lot of lines, so let me delete some of these real quick. So I apologize for that. So when looking at this white highlight I put in, I was telling everyone to watch for a pullback and watch that 93.50 a share area. Sure enough, that's where it basically held. It was not a very long hold on the chart. It was a quick wick on the 4 hour. If you switch to the 1 hour, it may have been a few candles that held there. But you have to understand you're playing low risk, high reward. When AMD has a dip, when it has this heavy run up going on, you don't want to miss the opportunity or at least think this is going to come down. I have to get puts. You never want to fight trends on a strength chart. And right now, AMD is still pushing. Where are the next zones? As you can see from my charting, I have not had any levels since above the 102 a share, which was the previous high that was happening. And obviously now we're breaking out to basically 130 a share. So switching back to the daily chart, when I chart stuff that's out of my area, I'm looking for historical zones that have either rejected or held as support. So right away, I'm looking at this area where we had basically why is it not? There we go. We had a rejection and a reject right here. Also basically a double top that happened about 6 months later in March of 2022. So I'm using these same zones in the current historical price action of AMD. So when putting a line there, it's not a dead on, it's just an idea of this zone is going to be heavy. So I'm going to switch to the 4 hour and I'm going to come back to those areas. and look at them so I can see pre-market and after hours. We're looking at this level here, and then also the double top that happened right here. This zone is going to take place in the current since the price action is now at that level. When looking at it, it's roughly around 124 to 125 a share. I'm not finding a level for a rejection. I'm finding a level for a pullback that can hold support on AMD. If you're only focused on the rejections, I can give you one right here with AMD in the gap fill. It's roughly 133 a share, and it could be a little bit more than that, but I see a lot of rejections that held as support historically. But once price action broke below that zone, it's now acting as a heavy rejection, a resistance zone as it pushes upside. So I'm going to make the top one at 133 a share. I'm going to make that orange, and I'm going to make the 124 a share area blue color. And I'm going to go back to the current times now. And this is basically how I don't want to say predict, but more so prepare for what could happen this week. I am not interested personally in trading AMD. I'm not interested in playing calls if it just starts pushing it open tomorrow. I want to see a pullback, whether it be a pullback from the recent time frames, whether it be a pullback to what I just found at roughly 124 a share. This is where personal bias comes in. This is when you have to understand where you want to enter and where you feel most comfortable entering if you want to get calls, if you want to get puts. For the ones that come to these charting sessions often or come to the classes, I am very big on not pushing my personal bias on other people. I like to speak logically and just speak facts. I don't like this setup. If you missed calls on the last week or two for AMD, you want to look for a solid entry point off of the zones that happened back between the all-time highs with AMD in late 2021 and early 2022. You need to find zones. You need to find correlations that you can use in the current price action. It's very difficult to just play a stock that's been breaking out because a lot of people just want to buy calls and hold. So you have to be very picky. You have to be very smart with your entry points. You don't want to just chase and just basically think, oh, it's ran already, it should just keep going. You don't want to put too much risk in your position, and you don't want to size too heavy on a questionable setup that may not continue running. Tech is heavy. Semiconductors is also very hot right now. AMD, NVIDIA, AMAT. There's a lot of stuff right now. So you don't want to just force anything, but wait for a setup. The pullback that I see, I'm trying to keep this short because I don't like to talk about setups that are breaking out. It's more so hope than waiting with new traders. New traders aren't focused on the better entry point. They just want to enter before it keeps running in their head. So if I'm looking for an entry on this, you can use basically this triple area of these levels, and I'll put individual highlights so it's easier to see. We had that reject there on AMD, the reject here, and then the third reject, which was basically a double top in this month area right here. AMD passed that, looking for a dip back down to roughly 124 a share. That's going to be possibly the better entry point than just buying calls at open tomorrow, or AMD's pushing up to 128 a share, 129. You just want to buy in before it's too late. I have the gap fill at roughly 133 a share. If we break the 133 a share, you can see that gap fill to the next lower high that happened here. We're focused on when AMD was forming after the all-time high, these previous lower highs that were forming. So after the 133, the gap fill is going to be 140 a share. If you're looking for a pullback on AMD to get calls, I would be looking at roughly 124 a share. I'm not saying a dip with calls is going to push the market or push AMD higher. It's just a lower risk entry compared to just buying off open, hoping that these green candles just keep going. Always focus on low risk, high reward, and you don't want to chase the play unless you understand what could happen with the risk in that situation. So just to recap real quick, a dip down to roughly 124 a share, I would look at for a dip buy for calls on AMD. The gap fill on the upside is going to be roughly 133 a share for AMD. So I'm switching over to Amazon now. Just like Microsoft, NVIDIA, AMD, Amazon is breaking out and trying to fill that gap on the larger frame still. I've been talking about Amazon for a while, about how I've wanted to catch the dips. And I've been telling you guys that 114 a share was going to be a heavy area to buy longs for calls if you had the opportunity. And we basically had a double bottom with Amazon at that 114 a share. Now that we've finally broken out, the biggest question at this point is, where is the next dip buy if we have it? How much higher is it going to run for the gap fill on the upside? There's a lot of hypotheticals that are going on with this right now. And just like AMD, I'm not very big on buying calls on the breakout. I'd much rather wait for a better entry point if you already missed the initial, which I told you guys was roughly the 114 a share. We were focused on that support holding based off that cup and handle practically. If I go to the 4-hour here, this cup and handle right here was forming. And I would tell you guys, if we break the brim of this cup, you want to catch that pullback to the 114 support, which was right here. It broke out, possibly faked out people to chase calls, had that nice pullback, probably got calls to sell, puts started to enter, even though that 114 a share was the main zone to hold if we did have a pullback. And sure enough, Amazon took off after that support was held. If I'm looking for a pullback, obviously 114 a share is the major one, but you want to focus on the previous higher high that was forming before we got to where we were. So looking at a nice entry point, either at, let me put a better zone, because a lot of these levels I have down here don't matter anymore. So let me readjust these real quick. So you can look at an entry point for calls. For me personally, this is not where I would want to enter, but this is where a lot of people want to start their starter position, is roughly around 118.5 a share. I personally like around 117 a share, 117.3, filling in the liquidity grab and not just, oh, the previous high was here, we have to enter off that, like forget about the stuff in between. I would be focused on this area right here that I just highlighted in blue. All this consolidation in the middle before the breakout, all of this is going to play a bigger effect than just this little area right here that basically double topped in after hours and pre-market, then rejected right off open. I want to catch where all the major volume is, and that's basically in the middle of this little setup at roughly 117.3 a share. If you're looking at that for a dip for calls, that's where I would be looking at, roughly 117.3. If the 117.3 does not hold and we drop lower, focus on that 114 to act as a support once again. And just like the previous stocks I've talked about, a dip is most likely not going to happen. So if you do chase the breakout, if you want to get calls before the ride keeps going on, understand your risk before just entering the position. There's a lot of factors you got to put into this, and not just the idea of, man, I don't want to see this run again and me just sit on the sidelines. You have to understand, if you buy this and it doesn't break out, you have to sit there and understand, okay, can I hold this contract if we dip down to 117, if we dip down to 114? Entering up here for calls, you have no direction on basically a rejection coming up. You have no major support outside of a $3 drop. Can you hold a contract off of that big of a drop if you chased at the peak of this setup? If I switch back to the daily, the major resistance that I'm focused on is once again another gap fill, which is going to be roughly around that 121 a share, which is basically where we currently hit on Friday. If you want to find another area, you want to look for major rejections or resistance that held. So when focused on the daily here, we had rejections. Once we broke out from these earnings, we pulled back and held this support right here off of the same historical rejections. Now that price action is above a rejection zone, it acts as a support zone. Since that support held, it tried to curl, rejected, and dropped right back down. Once we broke below that zone, we tried to break back upside right here. Not enough buying power, not enough buying pressure, not enough people buying the shares, so we dropped. At that point, it's trying to push back up and break it, but we just kept making lower highs. There was not enough strength pushing this upside past that 125 a share, 126 a share area. So now that the price action is approaching that, you have to understand that is going to be a major rejection if it contests. So I will put a level there for people just to understand that's what I personally am going to be watching. I'm not interested in buying calls off Amazon where it's at right now. I am focused on basically low risk, high reward entries. So right there are the main levels I have. The rejection of the gap fill is obviously roughly around 125 a share. The support that I would like to see is roughly 117.3 a share. And then the main support is that 114 a share on Amazon. This is the main support. If the 114 breaks, I would not be surprised if we end up contesting that 110 or even lower down to about 105 a share. So now moving over to Costco. Costco just had earnings and they ripped on Friday, I believe. Yes, Friday was the big breakout Costco had. And this is a stock that I've been charting with people for a while now, basically watching this triangle form, watching the lower highs and the higher lows hit, or lower highs, higher lows. Every time Costco hit these levels, it respected them. And now that we're finally breaking out of this channel, could there be a continuation on the upside with Costco pushing? Every time it pushes, you have to realize all these previous lower highs right here, these are now going to act as resistance. The first resistance we're going to have is roughly around where it's at right now. If we can break out of that, that's when the actual zones come into play. You have to understand, for every historical reject, every historical support, that's going to come into the current price action as it approaches those levels. So you have to understand Costco's breaking out. If you didn't get calls earlier in the week, last week, the swing, you have to understand you're going to be buying the breakout that has a resistance coming up. There's no guarantee it's going to keep pushing. So when looking at Costco, I'm going to switch back to the 4 hour. We're currently in that heavy zone. We're basically right there right now, rejecting, pushing back down. For me personally, like I said with the other stocks, I like to catch the dip buys for calls. If you're looking for a nice area, I like to give it some leeway. And obviously this is going to be a $6, $7 drop, but I want to catch stuff where it's heavier and lower risk, high reward in my favor. We had a lot of rejections on Costco right here. Once we broke above, we never held it as support. So now that we're coming back to that point, if we drop down, can we hold that as a support zone when it's historically acted as a resistance? Could the buyers become present if we dip back down to roughly $500 a share? Will that bring in anticipation for it to bounce off that support and carry back up to higher highs at that point? If we do hold or just push off open tomorrow, the gap fill that I'm going to be focused on is roughly around that 526 a share, and that's going off this zone right here, anywhere in this area. At that point, that's the gap fill for Costco. I don't really see too much to talk about with this, unlike Apple or Amazon. It's literally consolidating in the zone, trying to break out currently. Buying calls at the peak is going to be a risk only because of the rejection that is logical right here for a double top. Someone said square. I'll add square to the list. So with Costco, you want to focus on, for me personally, I'm looking for a dip because I want low risk, high reward. That's all I focus on. If I make one trade a week, but it's a low risk, high reward play, I'd rather have that than making 10 trades in a week where I'm just forcing trades. Oh, a breakout's going to happen. I have to buy calls. Low risk, high reward, less trades, more money. That's what I'm focused on. So with this setup, you want to be careful at roughly this, basically 110 a share. It's going to be heavy rejections on Costco. If you want to try and catch the reject and this new support, roughly $500 a share, I would be looking at to start call entry points. If you're looking for the gap fill, whether you're buying the breakout of 510, 526 will be the next area where there should be a slight rejection on Costco. So I'm switching over to Ford now. Ford, I am currently swinging. I entered this and alerted it on Thursday when it was at this bottom area right here. So I alerted this on Thursday when it had the drop off, and then we pushed obviously on Friday. Looking at Ford, basically the same setup as Costco. It's literally pushing at the main resistance at 1225, trying to break out there, hit the next resistance at roughly 1260 a share. Ford is basically at the rejection if it follows these lower highs on that fallen resistance trend. My play is up about 100% right now, so I'm not very biased on starting a new position or adding into my current position. I'm just going to ride the wave on this since I've already made profits off trimming. I'm letting runners run. But when playing a setup like this, since Ford is basically, it's the same situation as Costco, same reasoning, same stuff you'd be looking for with the rejection on the lower highs off the trend, currently at a heavy rejection. So I'll just give a brief explanation as to why I entered this, why I added the time I did for my contract to give you a better perspective on how to play a setup like this. So when I've been watching Ford, I watch this all the time. I am very heavy on this small cap only because it's very cheap on the contracts and it moves very smooth, and it respects the historical price action when it forms patterns or trends. So every time Ford hit on these zones, obviously this pulled back lower, so it basically made a lower low, but it still held with the buying pressure after the push up. So I'm focused on liquidity grab. It's not scaring me to think, oh, what if it drops lower here? I'm focused on a double bottom if it would have kept dropping. When I filled Ford on Thursday, I got the July expiration because I know historically Ford does not run very quick. It takes a week or so to gain that momentum. Once buyers approach and the volume picks up, it has that continuation on a week or two in a row. So I added about 2 months of time for an expiration, entered on Thursday down here. We had that gap up on Friday and the push off the news with Tesla. So I'm basically just trusting the chart, even if my mind is telling me this may not be a solid setup. Going off historical price action and historical setups, I know that when Ford is in this area holding for a few days, it gains that traction and pushes upside like it did on Friday. I didn't expect it to push that quick. And when it did, I was very surprised since I basically entered the day before. But now I'm looking for that move on Ford. I'm looking for that move that we may be having. Could this be the breakout of this triangle to push upside? That's why I only have runners left and they have July expiration time frame. So I can let these run without having any stress on the trade. You have to trust the chart and not just your mind. If you're like, for me, it was very difficult when I first started trading like this to buy calls at the bottom. When you're focused on, oh, if this gets heavy selling pressure, it's going to tank so bad. Focus on the chart and don't let your mind tell you or make you back out of an idea that you see and not just think about. I see this setup with Ford. Every time we come down, I get calls. I sell on the way up. When we hit the top, I get puts. Now that we're squeezing to the point on this triangle that Ford basically is going to break out upside or downside, I'm not focused on getting puts when it's this tight. I got calls where I wanted them, and I'll let those ride out whether it goes to zero or it keeps pushing upside and breaks out. These setups are very low risk, high reward if you play where calls are the best entry and or where puts are the best entry. You always want to respect the pattern in the setup. So I'm on Netflix now on the daily, and I'll switch to the 4 hour in a second. I just want to show everyone the larger picture with this real quick. So Netflix right now is obviously breaking out of this channel it's been in. It had that, I don't want to say a solid cup and handle formation, but it had that dip, that curl on the bottom, and now it's basically at the brim of this cup at the top. Basically a double top, also filled the gap if you go off the earnings drop off it had before. The biggest thing I've been telling people that have been asking about Netflix, I'm on the weekly time frame now. I'm looking for this gap fill on the upside with Netflix. Not saying it's going to happen in a week, in a month, in 2 months, but I want to see it fill this gap up to roughly $480 a share. First, we have a major zone, which I'm going to take some of these levels and move them. We have a major zone with Netflix coming up at this. I'm going to make this like a cayenne green color, and I'm going to take this away. So this $395, roughly $400 a share. This is going to be one of those levels on Netflix, just going off the historical analysis from the rejections it's had. We have rejections in here, rejection here. This was a little bit lower, obviously, but I'm looking for the gap. I want to give it room. I don't want to put it too low because then if it breaks above, your mindset is, oh, we broke the level, we're going to free run now. I want to give it space to really work its way up to that level. And that's roughly around $400 a share. So when I'm focused on that, that's the main push I want to see with Netflix is reach that 400 a share gap fill. Not saying it's going to happen tomorrow, not saying it's going to happen Wednesday, Thursday, Friday, next week. Playing a setup like this, you want to get the best entry like I've been saying. So when looking at Netflix, look for a pullback for calls. A lot of people that I talk to and we throw ideas at each other, I've been repeating myself, watch 372 a share, watch 372 a share. If you want to get calls on Netflix, and this is one thing I'm going to be doing because Netflix is one of my best stocks that I love to play and watch, that 372 a share is going to be a massive test for a higher low on support. If that level can hold, this is going to be that entry point, just like with Apple. If I go back to Apple on the 4 hour, we're looking for the same pullback. We're basically breaking out. I want to see a pullback. When looking at Netflix, we're breaking out. I want to see a pullback. That 372 is all I'm watching for calls. I don't want to play the breakout on Netflix. I don't want to risk getting calls. Say it pushes up $2, then it rejects heavy. I'd rather wait for the setup than to force what I don't want to do. If it keeps running, it keeps running. I'm not going to be upset because that's not my style of trade. I'd rather watch it go than force the trade and make money on it. Obviously, you want to make money, but if I'm not playing a setup that I'm comfortable with, I get emotional and I don't trade the way I should. So unless Netflix dips to that 372 a share, I will not be buying anything. The first gap fill I want to see is roughly 400 a share, and that's going off of this area right here. We're looking for this gap fill. If we break 400 a share, the next part I'll be watching, which obviously it's a major push to the upside, but I want to see this gap fill. That's roughly 465 to 480 a share. That's what I would like to see fill on Netflix in the larger frames. So I'm on ROBLOX now, and I'm going to start on the daily just to continue the same thing. I like to start on the larger frames. I do look at ROBLOX often, but I'm not very familiar with where it's been at in the past few weeks. So I want to pull up the daily just to get an overview. Like, is it at all-time lows? Is it contesting all-time lows? Is it maybe at all-time highs? So I can see the bigger picture on ROBLOX right now. Now that I understand that it's been consolidating basically between $33 a share and roughly $47 a share. It's just zoning up and down for the past about a year straight now. So when I'm looking at this, I'll move down to the 4-hour. Where is a solid entry point for calls? Where is the gap fill on the upside? Obviously, everything I'm saying is calls, bullish. You have to play trends. You have to play momentum. We are currently pushing overall. So you want to keep that in your head until we have a major reject and we see the trends flipping. You don't want to try and anticipate puts because it's literally a hypothetical hope that you're trying to enter and find that top in the current time frames. So when looking at ROBLOX, we have those rejections, which I've had this 41.8, basically $42 a share. I've had this level for a while, and we have not broken out of it since I've been talking about it back in April. We've had our pullbacks, not many solid support holds, so it's going to be hard to find an entry point if you want to get a pullback for ROBLOX. But the main support that I've had, obviously 36.5 a share is a major sell-off, but the one above that is roughly $38.3 a share. That looks like possibly the best entry point for calls if you want low risk, high reward. Just based off the setup for ROBLOX, it looks like we're going to end up pushing upside only because we're holding almost everything. We're basically forming a cup and handle. If I take this down to the 2-hour, we got the cup forming, and now we're just consolidating before we have that breakout. Whether it's upside or downside, ROBLOX is going to run just because of the heavy consolidation on the volume, the buying pressure. It's just up, down in this zone. The price action is going to break at some point, whether it's the upside at $42 a share break or the downside break at $38 a share. I like to play calls at the bottom, puts at the top. I'm not going to predict puts at the top when we're currently in a quote-unquote bull market or a push right now. So I want to see a pullback and a support hold at roughly $38 a share to enter calls on ROBLOX. If the $42 a share breaks on the upside, you want to focus on the gap fills like I talk about often. I'm going to switch to the daily just to put this in here real quick. We're looking at the area right here. We had a lot of rejections. So you're focused on the fills. I'm always on the larger frames. I'm not worried about the 5-minute, the 2-minute. I'm trying to find the bigger picture and then using those levels as I make my entry points on the 15-minute, the 30-minute, whatever I may be using. So if we get a dip on ROBLOX to 38 a share, that will be a nice entry point. Watch the reject around 42 a share. If you may get pushed into chasing calls or thinking the breakout's going to happen, you want to get calls before it's too late. Focus on the bigger picture. We've been zoning on ROBLOX. There's no major direction right now. When it does break out, it's going to have that move like it did on this rising wedge, but you have to watch out for the pullbacks that makes higher lows, and then you have the push back up to make higher highs. Focus on the larger frames and find that zone that you're going to be watching, because once it does contest, hypothetically, say 38 a share contests and it holds support, and then after a day or two of being down here, it starts to form that curl to push back upside. Use that indication to get calls, add a few weeks to your time for the contract, and let the chart do the move. So switching over to Shopify now, I'm going to start on the daily frame like I do. We had that heavy break upside with the earnings report, and they're still holding very well. Like always, I'm always looking for a better entry point if I want to catch calls. Shop's already had that pullback, it looks like. So at this point, for me personally, I'm going to be focused on, can we make that support hold and curl back upside? That's what you want to focus on. Can Shop get that curl going? If we do, there's only two things you really have to consider. We're going to have support down here. We're going to have resistance at the top. This is going to be a zone it's forming in. So there's no rush into getting calls too soon or too late. We may not even break out on the upside with Shop for a few days. So you want to try and catch that entry on that support zone. That's going to be roughly around $47.50 to $48 a share. That's what you want to be focused on. You're trying to catch the move in the process as it's forming. The rejection area is going to be roughly 65 a share. So there's a nice gap fill on the upside. And if that breaks out, there's more room to run even higher. So you want to focus on that formation with Shopify right now. There's no rush into this. There's no, what if I enter too late? You're only focused on the formation. You don't, if you want to get calls, you can, but you have to realize you may be holding for a few days if it just keeps consolidating at these levels between 57 a share and $58 a share, maybe even $59 a share. As this makes its way back up, that's when you can afford to get into this position. So let this form, watch that $57.50 a share zone, see if that support can hold this week on Shopify. Watch the gap fill up to $65 a share. Amazon's been hot, Apple's been hot. You have to realize the correlation in the sectors. Could Shopify push after Amazon had this massive week? Could it hold after the earnings it gapped up? Can it hold off buyers to push it to higher highs, break 65, maybe go to $70, $80 a share? So I'd be watching that 57.5 a share for calls, and I would give it a few weeks. If you want to play the week of, that's your risk, you have to understand. But with time, Shop looks very solid to break 65 a share in the next week or two. So this could be a nice swing play if it aligns the way you need it. So I'm switching over to Uber now. I'm going to start on the daily, and I'll get to Square after I go over Uber. And then just like always, I'll end with SPY. And if you guys have any other stocks you want me to look at, just let me know and I can get to it at the very end. So when looking at Uber right now, I'm very big on looking for trends, for looking for pattern setups. And obviously, if you're big on bull flags or whatever you want to call it, Uber is currently setting up heavy consolidation for the last about 2.5 weeks, 3 weeks, the same area between roughly $37.50 a share and $40 a share. If I'm looking at the daily, I can use the same perspective as the falling wedge, which is now going to be in this rising wedge. It's not as clean as a lot of people want for a textbook example, but it's the idea of the formation getting to where it needs to be. There's a lot of stuff down here that's not aligning, and I understand that. There's a lot of fake breaks that push back, fake break pushes back. A lot of people are then like, well, I just want to put the trend at the exact bottoms of this formation. You're not seeing anything when you just put a line like this. You have to understand when you do trend lines, you're focused on the overall chart candles, all of the consolidation. Where did it hold the most off of these wicks on the breakdown, whether it's a few days or a week? It's just a nice liquidity graph for the market makers and hedge funds to load into their positions when retail gets shaken out and they send it right back up. It happens all the time. Uber dropped down here 3 days back to back of just green, 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 and it pushed up almost $5 a share after a quote unquote sell off. Retail's probably chasing, shorting this position down. You have to understand. Jarvis signaled a shop swing. He did enter that. He's been mentioning that for a while. So when looking at Uber, if you're focused on the stuff that I look for, or just you personally, you can put this trend however you like. Obviously, it doesn't matter, but focus on the idea that we're currently in a bull flag that could push higher, but we're also at rejections when looking at the historical zones of where Uber used to be. I'm going to take a few of these lines away so it's a little more clear for you guys. I'm also going to change the color on a few of these. I'm going to take this one away. So when looking at Uber, You have to understand that we held quote unquote support here. That's the only level that really held before this heavy consolidation and a reject right here off of a rejection. So that same level that was basically held in this rough zone between 37.3 and $38 a share, that's a heavy zone. And currently with where we're at right now with the price action, Uber is hovering right at that zone as a support. Look for a recent gap fill to $34 a share. Let me put a level there and see. I mean, if Uber drops that heavy, that'd be a nice short position for that. I mean, a $4 drop, that's a nice move for a stock this cheap for the contracts to gain that IV push. Last chart had a gap, I think. Oh, okay, so you're looking at the daily right here. I see what you mean now. Because I know when I've been telling you guys about Uber, I had this position set, I think 3 weeks ago, and I added a week of time on it. And obviously the contract died out before the push happened. I had us enter it roughly around here. The push hit, but it was after the contract already expired. So when looking at Uber, the gap down to 34 would be a nice entry for calls. But the biggest thing you have to realize, what are the chances of it dropping that heavy when we've had massive historical zones between that gap fill? Are the buyers already loading up at this $38 a share area? Or if you want to lower this down a bit to hit the actual volume back here with the current times, that $37 share area could be that new support for Uber. Because a lot of people don't understand the concept of a liquidity grab. The big boys, market makers, hedge funds, they like to send stocks down that look bearish just to send them back up. I mean, it happens all the time. If you go back to this area with Uber, we had a nice support here, and then we broke downside. Right after that downside break, it held for a few days and then just sent in the next 3 days up almost $5 a share. That is what I'm basically expecting on this same setup for Uber right here. We had that consolidation. Could we get that pullback to roughly $37 a share just to push right back up on the upside? Could that happen? You always want to have the bigger perspective on the larger frames. You don't want to focus on, oh, like I want to try and catch calls before it's too late. Focus on what most retail aren't looking at, and that's the fake out, quote unquote. The fake out of, oh, calls are dead, I have to switch to puts. Why are you switching the puts when historically a drop off to that 37 a share may be a solid entry point for calls to get a cheaper price for them? That's what I'd be looking at for Uber. If you want to catch the gap fill to 34 a share, that's perfectly fine. But you have to realize that gap down is literally almost a $3 drop from what I see at 37 a share. If you want to play that, you can. The patience is way better that way because you're basically waiting for the quote unquote best possible entry at 34 a share. So I'm not saying it's a bad idea, but just realize the patience that you need to enter on a dip at that level is going to be a lot more conviction wise than just 37 a share. I like how it's rejected. I like how it rejected here. Now that we're above that price action, I would like to see it hold that support at 37. And I think it was Kenny that said that. Yeah, and just like Kenny said, if that 37 a share breaks, 34 is going to be the main spot to watch for that new support to form. So for me, I'd be watching 37 a share, below that, 34 a share. But if 37 holds, watch the fill. That's basically going to be going off the areas that have rejected or held beforehand, which is basically just the top of this little zone. There's not much room if we break out above 40.5 a share on Uber. It has a lot of room to go. Obviously, we have a lot of rejection here, rejections here. But the overall picture on this, if we hold and push, Uber's going to have a squeeze, in my opinion. That 37 a share for support is going to be massive. If we can hold there and push upside, there's no really telling how high this could go. I'm not saying 50, 60 a share, but seeing low 40s, mid 40s is very easily accomplished for Uber if that happens. So I'm gonna, let me add square to this real quick. Or block, I should say. Okay, so just like always, I'm starting on the daily chart for for Square, aka Block. I'm still going to call it Square because the symbol's still SQ. But on the daily, we're still in this falling wedge, which I haven't charted Square, aka Block, in a while. But I've had this trend line here since I think basically mid-April when I last charted this with you guys, and we're basically still holding that trend on the lower highs. It looks like we could be forming a curl. I'm very unbiased with stuff I'm not familiar with, so I'm not going to be speaking too, I don't want to say highly, but just very confident with Square since I'm not very familiar with how it moves and the price action. But it looks like we're holding, or at least right at, that major support, even though the $51 to $52 a share is the main support for the bottom. But if we continue to hold on this pullback, it looks like this could have a nice recovery with some buying pressure roughly around this area. It's looking like, which is around, let me put a line right there, roughly $57.50 a share. Square can be one of those pushes because I know a lot of people have also been talking about PayPal. A lot of financial processing payment services are going to have that next boom since tech's been hot. Consumer discrete is pushing. You want to focus on the next sector rotation, whether it be health sector, financials, or even real estate, utilities. You want to focus on where the money's going next off the volume pushes for the sector or just the individual stocks that make up that sector fund. So using Block, using PayPal, watch to see where that next support's going to form. The biggest thing I like to do is try and find, or at least wait for, the trends to form with higher lows. I'm going to delete this highlight so it's not as confusing. We basically have the low here with the purple highlight. Then you will start wanting to see higher lows form. You want to see those trends switch to the bearish side since we've been having, or bullish side since we've been having bearish for a while now. Straight downtrend on Square, aka Block. So that's when I start to watch and see, can we form a higher low, push back up, and start to form that bullish sentiment on a setup like this. That's what I'm focused on. Because then at that point, I'm playing the chart. The chart's not playing me. I'm not going to get screwed because I'm prepared for what could happen. I'm waiting for the chart to set up and form those higher lows and higher highs. So that's the kind of stuff that I like to watch, especially on stocks like Square when it's at lows like this on the year of to date. So when looking at this, I would like to see a support at roughly 57.6, if not $58 a share. If we hold there and push, I want to see a contest around this area, which will be roughly, for a rejection, around $62 a share. I want to see this form a bullish trend. If you like, I know I keep saying this, but Square has been in a bearish trend since basically February of this year. Nothing but lower highs and lower lows. You want to see a reversal. You want to see a bearish flip to a bullish trend on the upside. That's what you want to see with these kind of setups. Someone said SPX. I can do SPX. Do you mind if I do SPY instead of SPX, Kenny? It's basically the same chart. It's just SPY. You can see pre-market and after hours. If you want SPX, I can do both though. I'm going to go to SPY and start with this. So obviously, I'm not very heavy on trading SPY or SPX. I know Rippy God, aka Hassan, that's his like main go-to. So I'm not going to go into depth on explaining what I see with this because he's probably going to give a breakdown tomorrow in pre-market. But I will still give you guys my personal bias, which I'm not very strong on speaking what I feel. I just like going off the chart. When looking at the daily on SPY, let me get rid of some of these trend lines. We're basically breaking the highs from the previous few months. There's no major breakout just yet since we do have a heavy rejection coming up, which is basically where I have this orange line at 422 a share. And I have a gap fill up to 430. And eventually I would not be surprised if we touch $440 a share on SPY before we make our next leg down. The biggest thing I've been telling people, when looking at SPY, you don't want to go against trends. You want to focus on where are the higher lows on every dip, where are the rejections on the pushes on the upside. SPY has been literally every dip is bought up. Every dip is bought up. Every push is just slowly making higher highs. All the dips are literally double bottoms with heavy buying pressure when they recontest, and they just send right back to the upside. I've been telling people every time. Obviously, a few weeks ago when I was talking about this, I was saying how 403 would be a heavy support for SPY if it does pull back and jump. We had two massive dip buys to that area that easily caught that buying pressure back up. Same thing happened in the past 2 to 3 weeks. We had that dip down to the 410, basically 409 to 410. We held that and pushed up. So now at this point, if we follow the trends that I see, I'm speaking only on charts. This is not what I'm going to do. I'm just going off what I see right now. Focus on the next dip. That could happen. I would not be surprised if we do dip on SPY roughly 414 a share, 415 a share would be a nice liquidity grab and send on the upside. The biggest thing that the market makers like to do, or at least that I feel like they like to do, they find zones that when they break, retail gets shooken out because they're focused on stuff like this, the smaller frames. So when we saw SPY push up to this area, and we had this major sell-off in 2 days, this right here, so many retail were probably thinking, oh, we're bearish. We couldn't hold the levels on the highs. We're breaking back to the downside. The only thing that I was watching and telling people, watch the liquidity grab. Watch how they're going to buy it right where the last support was, because they know retail's going to get shooken out. We didn't hold this resistance right here, aka support, as the price comes down. We didn't hold that. We broke down on the downside. Retail flips the puts. They flip to the short side. It gets bought up and sent right back to the upside. I would not be surprised if we dip one more time before we push higher to that 414 to 415 a share. And it would not ruin any bullish setup. Overall on the daily, SPY is still going to be bullish, even if it dips down and sends right back up. It's going to form the same formation as the last few weeks. We dip, we push higher. We dip, we push higher. We're literally just forming that quote unquote bull market run up. I am focused on the 430, aka you have to hit the 422 first, but the 430 is my main gap fill. And after 430, I would not be surprised if we end up touching that 440 a share. So those are the main stuff, the main levels that I'm watching. Even though I don't trade SPY or SPX, I still watch it for overall direction when I'm watching other stocks. But that is what I personally see. Does anyone have any stocks they want me to go through real quick, or any questions, personal statements? I think I read all the messages. Yeah. Any feedback, any critique, any personal thoughts for this upcoming week? Everything that I'm watching is literally a dip and a rip. I'm waiting for the best possible entry points for calls. I don't want to chase the breakouts. I'd rather sit and watch the push, because eventually there's going to be a pullback. I'm not in a rush to catch anything tomorrow, because I'm very patient. I'm very calm. I'm not in a rush to make money. I just want to play the best setup so that my emotions are gone. I have the lowest risk, high reward in my favor. And that's what I do when I enter my positions. Can you go over LULU? Yeah, I got you. Let me pull it up real quick. And just like a lot of other ones, I mean, I've been seeing LULU news trending on social media with like stores getting robbed or something. And I've never traded LULU. So just like every other stock that I've talked about, I'm just going to go off what I see on the actual setup. I don't really know what's going on with volume on average per the day, like regular average over the 3-month time frame. So I'm just going off what I see off of first glance. And obviously with me, I'm very heavy on zones. I see a nice support zone approaching. If it does touch this low at roughly, it's around $330 a share, $330 a share. Yeah, so you're looking at the gap fill too, it looked like, or you're looking at the gap fill on the upside. I can see a nice down draw to about 330 a share. And if we hold that as support, obviously a fake dip below that, I would not be surprised if we dip down to 320 a share and hold that. Let me change the colors so that they're separated. But looking at that 330 a share as support, that looks like the main first level that could hold. And if we do bounce off that, we would literally just reclaim what we just came down from, which is, I think this is what you're probably focused on as well for a bounce. If you're looking at calls, is roughly that push back to 355 to 360 a share. But as of now, we have this gap fill down to about $330 for a support. So outside of that, I don't like this setup. I'm very iffy on stuff like this, but what I usually do when I don't want to sit and watch it, I will literally set an alert that's roughly around what I want to see hold. So if I'm looking at LULU and I know, okay, I like the support area at roughly 330 a share, I'll set an alert at like 332, and I'll set an alert that's below price action. So if the price drops below that 332, now I get alerted, and that's when I start watching the chart setup. I don't want to just sit here and just watch LULU like consolidate up and down movement. I want to get alerted when it gets close to what I want. And then at that point, when I'm alerted, I'll come back and I'll watch it with my own eyes, and I'll wait to see how the volume reacts. I'll wait to see how it sets up on my quote unquote support zone I want to see hold. But that's what I see on LULU right now. If the 330 a share does not hold support, I would not be surprised if 320 is the next support that should hold. Those are the only two supports I see. And obviously the upside on a bounce, I would like to see that 355 clear on the takeoff to the upside again. So hopefully that was a good enough short breakdown, if that makes sense. I'm not very big on the 15-minute, the 30-minute. I want to chart on the larger, find the major zones, and then just wait for the chart to come to me. At that point, I will start watching it heavier, but that's usually how I do my charting. The success rate's a lot higher for me. I'm not focused on, oh, the 5 minutes breaking bearish, like, okay, you're on the 5 minute, but where exactly in this area on historically has this played a part in movement? So I'm not just focused on, oh, the 5 minute with charting. I understand you can put, okay, we have a resistance right here. We have a nice support from Friday right here. But overall, where are these zones at on the larger frames? Has there been rejections? Has there been support holds? That's why I chart like this. And then when we hit the major zones, I start watching. And if you guys want an example, I don't mind pulling something up real quick. There's been a lot of stuff that formed this way that I've made. I don't want to say made a lot of money on, but just made money on a low risk, high reward setup. My emotions are gone. I add time to a contract, I enter, and I let it work its way out. It's a lot more simpler than trying to catch that 30% move the week of, and then it may go against you in some way. Does anyone have any more stocks? Anything you want to talk about? Anything at all? I'll give it a few seconds for people to type if they need to. And I appreciate you guys coming out. This is your first time. I know not just me, but Rippy, God, and Jarvis. Hope to see you guys again soon. We have class this week with a lot of important stuff. So if you guys are free, don't be scared to ask questions about when the times are, asking about more stuff you want to learn about. We're here to give you the best quality content, even if it means us putting in the extra effort. We just want to help people make money and understand the bigger process of all this, and not just making big gains, but understanding how to keep the money you make and grow it. Yeah, you're welcome, Tom. Do you look at indicators when charting on the daily? So when I'm charting, I don't use indicators. I usually am just focused on the zones, because price action for me over the years that I've been diving deep into the formation of charts, price action and zones tend to play a bigger role into my personal trading style, instead of using like the EMA 200, the EMA 50 for the daily and the 4 hour to find those like golden cross and then the death cross. I used to use those, but eventually I came down to stuff just like what you see on my screen. I chart zones and I just wait. And it's came in abundance with how much it's helped me, and it's lowered my emotional standpoint with having all these indicators on the screen. Even when I day trade or make a position entry point, I usually don't even use indicators either. I just focus on the zones. Sometimes I'll see if the volume is heavier, quote unquote, the day of now than Friday or the day before. I'm always looking for like a differential off historical analysis over actual indicators on my screen. Because I know a lot of people, they do use indicators on the daily. I know the biggest ones are like the moving average and the exponential moving average, the 200 and the 50. A lot of people like to use those for the larger frames. And that's one thing I've tried, but like me personally, I don't push my style onto other people. I just speak on what I do. I don't find a benefit for how I trade using indicators. The biggest thing I'll probably use on like the 5-minute and the 15 is probably the VWAP, but outside of that, I'm not very heavy on using stuff. So hopefully that was a good answer to your question, and also something that you were hoping to hear, I guess I can say. Simple trading is definitely the best in my opinion, but the biggest thing you have to consider is just low risk, high reward. You don't want to oversize any position, because 5 wins sizing 10% of your account, the 6th time that you're thinking you're invisible and you size 30% to 40% of your account, one heavy loss on an oversize will take out a week of your gains. So it's not really the fact of like, I'm winning. It's more so the consistency of sizing, understanding what your personal style is, knowing how you make your highest rate of return based off your losses. It's all based off like you as a person, you as a trader, your personality, basically. But if you guys don't have any more questions or statements, don't be afraid to add any of us in the Discord to ask any more questions. You guys have access to the Academy discussion and whatnot. Any other topics you guys want to hear about, since this is just the charting class, whether it's Sunday or Monday night, we have our regular actual classes where we teach you guys whether it's risk management or how to chart, how to find the best contract, how to actually like grow your account and not just make money and then lose it. So any other topics you want to hear about on the Thursday night classes or just add-ons throughout the week, definitely don't be afraid to speak up and just say what you feel like you want to learn more on. Do you auto set up your stop loss? So when I enter trades, I can't get into all the like deep side of how I do it all, but I'm always, there's a class on it that I can like show the link in the Discord, but I always have, let me see if I can pull this up. Let me know if you guys see my screen as it changes, which I think you should. So when I'm looking at charts and setups, I have the option, oh geez, this loads. I have the option chart side by side with my actual stock chart that I'm watching. So hypothetically, say I'm looking at Netflix on the actual chart, and then I'm watching Netflix in a specific contract. Let's just say the call for 400 this week. I'm using the contract chart and the actual stock chart as my stop loss, if that makes sense. I'm manual selling for a loss when I do, but I also size minimal to the point where I can hold a position down 50%, down 60%, and I'm not worried. A lot of people oversize and they're down 20% and they're stressing like they have to get out before it's too late. I'll size to the point when if I'm down 70%, 80% on a position that could come back if the chart holds the zone I want, my 80% loss can come back to break even, but I size so light that being in the red that much isn't affecting my emotions with having to sell for a loss on that trade. So I'm always going off what I see on the contract chart based off the actual setup on the stock chart. I'm using all of this for correlation. So my stop is always based off what I see right here on the actual chart. Is that going to pop up? There we go. I'm using levels on the stock contract chart along with the levels on the actual stock chart. I mean, it's a lot to get into, and I've taught a class on this before, and I can always bring it back up again. But there is a video on our YouTube page that shows you how I explain what I do. Stop loss is all mental for me. It's never like I enter it 1.5 a contract, my stop loss is 1.1. I calculate my stop loss based off the contract chart and also the stock chart zones that I'm watching. I don't just put an entry to sell based off I can't afford to lose this much, so I have to get out. Everything is based off support and resistance for all my entries, all my exits, and that's why all my trades are stress-free and emotional-free, because I'm not attached to the money I'm putting in. I'm literally playing the chart, and if the chart breaks one way or the other, I just sell, and that's how I do it. Can you tell which video it is? Yeah, let me stop the recording real quick.